Welcome to the deep dive. Today, we're going to be tackling some pretty interesting financial reports you've sent our way, all focused on commodities and the Indian stock market.
All right.
So we've got a commodity outlook report, some in-depth market analysis from Kotak, and a broad market valuation handbook from Motilal Oswal.
Sounds good.
There's a lot to unpack here,
Yeah.
from global trade wars and their impact on things like the price of metals
Right.
to the potential of biofuels in India.
Interesting stuff.
So let's see if we can help you make sense of this financial puzzle and find some intriguing insights into where these markets might be headed.
The global economy is so interconnected
Okay.
that events happening thousands of miles away can end up impacting your wallet.
Okay, so remind me why I should care about a trade war happening between the U.S. and China.
Well, imagine a world where your smartphone or electric car suddenly becomes a lot more expensive.
Oh,
That's one possible consequence of this trade war.
ouch, not a fan of more expensive electronics.
No one is. And this trade war is directly impacting the cost of metals like copper and zinc,
Right.
which are used in all sorts of everyday products.
Okay.
The Commodity Outlook report mentions that President Trump has implemented tariffs on Chinese goods.
Mm-hmm.
And of course, China has retaliated with its own duties.
Right. So
This creates a lot of uncertainty in the global metals market.
what does this mean for me, like, practically?
The report predicts that base metals like copper and zinc are likely to trade sideways to lower due to these tariffs.
I see.
Whether you're an investor or just a consumer, these trade tensions have the potential to ripple through the economy and affect your wallet in very real ways.
Got it. So trade wars are bad for everyone.
Pretty much.
What else is happening globally that I should know about?
While trade wars heat up,
Okay.
OPEC Plus is adding fuel to another fire, the oil market.
OPEC, as in the Organization of the Petroleum Exporting Countries?
Yes, that's the one.
What are they up to?
They've decided to increase oil production after years of production cuts. This comes amidst concerns about a potential surplus in the market,
Okay.
which is already causing some ripples.
So what's the impact? Like, will gas prices go up?
It's too early to tell, for sure,
Okay.
but we are seeing some immediate reactions in the market.
Such as?
Brent crude oil prices, for example, have already hit their lowest closing price since November, dipping below $70 a barrel for the first time since October.
Wow.
This is definitely a situation worth monitoring.
Okay. Noted global trade wars.
Right,
Fluctuating oil prices, definitely some things to keep an eye on.
for sure.
Now, let's switch gears and look at the Indian market.
Okay.
What's the overall vibe?
The Motilal Oswal handbook gives us a bit of a mixed picture.
Okay.
The Nifty India's benchmark stock index
Uh-huh.
has seen a correction for the 5th consecutive month. In February alone, it fell by 5.9%,
Wow.
which is the second largest monthly decline since March 2020.
That sounds a little scary
Well,
for anyone invested in the Indian market.
there's no need to panic.
Okay.
The handbook also points out that large-cap stocks have actually gained 1% over the past year,
Okay.
outperforming mid- and small-cap stocks.
Interesting.
So it's not all doom and gloom.
Okay. So there's a difference in how these different types of stocks are performing.
Exactly.
So maybe there are still some opportunities for making money despite this correction.
You're right.
Okay.
Not all sectors are created equal in this market.
Right.
Let's dive into a couple of sectors that are looking particularly promising according to Kotak's reports.
Okay. Sounds good.
First up, capital goods companies.
Okay.
They're pretty optimistic about this sector,
Right.
driven by anticipated infrastructure spending and a potential uptick in orders.
So what does this mean for investors? Are there specific companies to watch?
Kotak has upgraded Carborundum Universal, or CUMI, to a BUI rating.
Hmm.
CUMI is a company to watch,
Okay.
especially since their stock price doesn't yet reflect the potential of their silicon carbide business,
Got it.
which is used in the semiconductor market.
So a company with a lot of growth potential
Yeah.
might be undervalued right now.
Potentially.
Interesting. What other promising sectors did the reports mention?
Another area that caught my eye is biofuels.
Okay.
India is making a big push towards renewable energy,
Yeah.
and biofuels are playing a key role.
I've been hearing a lot about biofuels in the news lately,
Right.
so it makes sense that this would be a hot sector.
It is.
Okay.
Kotak is bullish on Praj Industries,
Mm-hmm.
a company specializing in biofuel technology.
Okay.
They see Praj as a beneficiary of the Global Biofuel Alliance and India's push for higher ethanol blending targets.
Mm.
This is definitely a company and sector worth keeping on your radar.
Okay, so we've got capital goods like CUMI
Right.
and biofuels like Praj Industries
Yes,
as potential bright spots in the Indian market.
exactly.
Should I just go all in on those sectors right now?
While there are pockets of strength,
Yeah.
it's important to proceed with caution.
Right.
The Indian market isn't operating in a vacuum.
Okay.
It's still exposed to global economic uncertainties
Okay.
and some internal challenges.
You're right, there are always risks to consider.
Always.
So, what should investors be wary of in the Indian market?
Kotak's analysis indicates some concern about asset quality in the unsecured lending segment.
Okay.
They suggest delinquencies could be an issue,
Uh,
leading to higher credit costs for banks.
Unsecured lending, huh?
Yeah.
So basically, loans without collateral backing them up.
Yes.
That does sound a bit risky.
It is something to watch.
Okay.
And of course, the Phillip Capital report reminds us that the Indian market isn't immune to global headwinds.
Right.
U.S. economic uncertainty, particularly regarding inflation, is a factor to watch as well.
Right, we talked about that earlier.
Yeah.
Those ripple effects can be felt worldwide.
Exactly. So, despite the challenges, the Indian market presents compelling opportunities for investors who are selective and focus on sectors with strong growth potential, like the ones we've discussed.
Okay, I'm starting to get the big picture here.
Good.
Global events like trade wars and OPEC decisions can create uncertainty and impact prices.
Right.
The Indian market is showing a mix of strength and weakness, with some sectors doing better than others. And there are specific companies like CUMI and Praj Industries that are worth investigating further.
Definitely.
What else can you tell me about these companies and their competitive landscapes?
Well, there's definitely more to uncover.
Okay.
Let's take a closer look at what the reports say about CUMI and Praj Industries and see how they stack up against their competition.
That sounds like a great place to pick up in part 2.
I agree.
Thanks for breaking this down for me so far.
Yeah.
I'm starting to feel a lot more informed about these complex markets.
You're welcome.
Looking forward to continuing this deep dive in the next episode.
Me too.
All right, so last time we talked about CUMI and Praj Industries as potential bright spots in the Indian market.
Right.
Before I go racing off to buy stock in these companies, can you tell me a little bit more about what they do and like who they're up against?
It's always smart to look beyond a single company and understand the broader context.
Right.
So let's zoom out a bit
Okay.
and look at the competitive landscape for both capital goods and biofuels.
Okay, let's start with CUMI.
Okay.
What kind of competition are they facing?
CUMI specializes in industrial ceramics and abrasives.
Okay.
They're going up against some global giants in this space,
Okay.
like Saint-Gobain
Uh-huh.
and Imerys.
I see.
To give you an idea of the difference in scale,
Okay.
CUMI's revenue in this area is about 540 million euros,
Wow.
while Saint-Gobain's is a whopping 44 billion.
That's a huge difference.
It is.
So how does a company like CUMI even compete with giants like that?
CUMI is focusing on specialized areas, like silicon carbide-based ceramics.
Okay.
These are crucial for high-growth sectors like semiconductors,
Yeah.
which are used in everything from smartphones to electric cars.
Right.
They're also really investing in research and development to stay ahead of the curve.
So rather than trying to be everything to everyone, they're carving out a niche for themselves in a high-growth area.
Exactly.
Okay.
They're developing thinner ceramics for electronics and exploring new uses for metallized ceramics,
I see.
like in medical equipment and implants.
Wow.
It's a classic David versus Goliath story,
Right.
where specialization and innovation are key.
Makes sense.
Yeah.
So what about Praj Industries?
Okay.
What's their competitive situation in the biofuels arena?
The biofuels market is a pretty dynamic space with a lot of competition,
Yeah.
but Praj has established itself as a leader,
Okay.
particularly in ethanol production.
Uh-huh.
The Kotak report highlights their potential in the compressed biogas segment,
Okay.
also known as CBG.
CBG. Okay.
They estimate the total addressable market in India for CBG to be almost 3 trillion rupees by 2034.
3 trillion. That's a massive number.
It is.
What's driving all that growth?
India's demand for compressed natural gas, CNG,
Okay.
and piped natural gas, PNG,
Mm-hmm.
is projected to skyrocket over the next decade,
Wow.
and the government is encouraging the use of CBG,
Okay.
which is essentially renewable CNG, made from biodegradable organic materials.
I see.
It's a win-win.
Right.
It helps India manage its waste and reduce greenhouse gas emissions.
Praj seems to be in a great position to capitalize on this trend.
They do.
I'm also seeing that Kotak used what's called a discounted cash flow or DCF model
Yeah.
to analyze Praj. What does that tell us?
The DCF model is basically a way to estimate the intrinsic value of a company
Okay.
based on its future cash flows
Right.
or how much money they're expected to make.
I see.
Kotak's analysis projects a 16.7% compound annual growth rate.
Mm-hmm.
We can call that KEGR for short.
Okay, CGR. Got
The
it.
project's free cash flow over the next decade.
So their cash flow is expected to grow by over 16% each year for the next 10 years.
That's what their analysis suggests, yes.
Oh,
They also highlight another key metric called Praj's return on invested capital, or ROIC.
ROIC.
ROIC is basically a measure of how effectively a company uses the money invested in its operations.
Got it.
And Kotak's analysis shows that Praj's ROIC is expected to remain strong
Okay.
and even increase over the next 10 years.
So they're good at turning investments into profit,
Yes.
which is a good sign for their long-term success, right?
Exactly.
Okay.
They're not just growing, they're growing profitably.
Right.
But let's not forget the bigger picture.
Yeah.
We're talking about the Indian market,
Uh-huh.
which we know is facing some headwinds.
Right. Even with promising individual companies like Praj,
Yeah.
we can't ignore the overall market trends.
That's right.
What else do these reports tell us about those?
One thing that really stood out to me in the Motala Oswal handbook
Okay.
was the difference in performance between different segments of the market.
Okay.
For example,
Yeah.
while the Nifty has been correcting for several months, large cap stocks have actually outperformed.
So even though the overall market is down,
Yeah.
certain segments are doing better than others.
Yes.
Okay.
Over the last 12 months,
Uh-huh.
large cap stocks have managed a 1% gain,
Okay.
while mid caps are down by 1%
Mm-hmm.
and small caps have fallen by 8%.
Wow. So quite a difference.
Yes.
Interesting.
This suggests that in times of uncertainty, investors might be seeking the stability of larger companies.
Right. That makes sense.
Yeah.
But is it always better to invest in large cap stocks?
Not necessarily.
Okay.
The report points out that over the past 5 years,
Mm-hmm.
mid caps have actually significantly outperformed large caps,
Oh, wow.
delivering an 87% return
Mm.
compared to the large cap gain of 51%.
So it sounds like for those with a longer term view,
Yes.
mid caps might be more rewarding even if they're a bit riskier in the short term.
That's the trade-off.
Yeah.
It's all about your individual risk tolerance and investment goals.
Right.
But speaking of risk, let's look at some of the challenges facing the Indian market that investors should be aware of.
All right. What should we be watching out for?
One potential concern that came up in several of the reports is the issue of unsecured lending in India.
Okay.
Kotak, for example,
Mm-hmm.
is worried about the quality of these loans,
Right.
which could lead to more borrowers defaulting.
And why is that a problem for the overall market?
Well, if a lot of borrowers start defaulting on their loans,
Yeah.
it could mean trouble for the banks who lent them the money.
Uh-huh.
This could lead to higher credit costs for banks and ultimately impact their profits.
So it's not just about finding companies with great growth potential.
Well,
You also need to be aware of the broader economic factors that could impact their performance, right?
exactly.
Okay.
And one of the biggest factors to watch right now is global economic uncertainty,
Right.
particularly what's happening in the U.S.
Right. We talked about the trade war earlier. What else is happening in the U.S. that could impact India?
The Philip Capital report specifically mentions concerns about U.S. inflation.
Okay.
If inflation continues to rise,
Yeah,
the Federal Reserve might be forced to raise interest rates more aggressively.
I see.
And that could have a ripple effect on emerging markets like India.
How so?
Higher interest rates in the U.S. tend to attract capital away from emerging markets.
Okay.
Investors often move their money to where they can get the best returns with the least risk.
Makes sense.
This can put downward pressure on currencies like the Indian rupee
Right.
and make it more expensive for Indian companies to borrow money.
So even though India has its own strengths and opportunities, it's still vulnerable to these external economic shocks.
Unfortunately, yes.
It sounds like there's a lot to consider when investing in the Indian market.
There is.
How do we even begin to make sense of all of this information?
Don't worry, we're going to connect the dots and bring it all together in part 3.
Okay, good.
We'll look at how these global trends and local challenges might impact your investment decisions in the Indian market.
All right, we've covered a lot of ground in this deep dive. We have from global trade wars and oil production to the intricacies of the Indian stock market.
It's a lot to take in.
It's been quite a journey,
Yeah.
but I'm still looking for those aha moments, those insights that really help connect the dots
Right.
and make sense of this complex financial world.
Okay, yeah.
Okay, I'm ready for those light bulb moments. What have you got for me?
I think we've got some pretty thought-provoking insights here,
Okay.
especially when we start piecing together the different bits of information from these reports.
Okay, great.
Remember the beginning of our conversation when we talked about the U.S.-China trade war
Yeah.
and its potential impact on metal prices?
Yeah. How it could lead to higher prices for everyday products, that domino effect you mentioned.
Oh, well, the Motilal Oswal Handbook compares global markets
Okay.
and points out something interesting.
Okay.
India's stock market, measured by the MSCI India Index, has actually underperformed compared to the broader MSCI Emerging Markets Index over the last 12 months.
So even with the potential for India to benefit from the trade war,
Yeah.
as companies look for alternative manufacturing hubs,
Right.
the Indian market hasn't really reflected that.
Not as much as you might expect.
Why not?
It's probably a combination of factors.
Okay.
India's own economic growth has been a bit sluggish.
I see.
There are also concerns about U.S. inflation and interest rates,
Right.
which are making global investors hesitant to put their money into emerging markets right now.
Right. Yeah, that makes sense.
And of course, there's always the risk that this trade war could escalate even further.
So even when there seem to be clear opportunities,
Yeah.
there are always underlying complexities that can influence what actually happens in the market.
You got it.
Speaking of downsides,
Okay.
I'm thinking back to Kotak's concerns about asset quality and the unsecured lending segment.
Yeah, that's a valid concern.
Is that something that should be like a major red flag for investors looking at the Indian banking sector?
It's definitely a risk factor to be aware of.
Okay.
What they're saying is that there's a real chance that more borrowers could default on their loans,
Yeah.
especially in the unsecured lending space.
Mm.
This could lead to higher credit costs for banks and potentially eat into their profits.
And I imagine this is all compounded by those global economic uncertainties we've been talking about.
Absolutely.
Right.
If the global economy slows down or if interest rates rise sharply,
Yeah.
it could put even more pressure on borrowers in emerging markets like India,
Right.
making it harder for them to repay their loans.
So while there are exciting growth opportunities in India,
Yes,
there are also real risks to consider.
definitely a balancing act.
But are there any potential bright spots
Yeah.
within the Indian banking sector, despite these challenges?
The Motilal Oswal Handbook actually suggests that public sector banks, also known as PSU banks,
Been performing quite well. PSU banks. Those are the government-owned banks, right?
that's right,
Okay.
and their analysis indicates that PSU banks have seen good profitability
Okay.
and have been effective at managing their credit costs.
So even within a sector that's facing some headwinds,
Yeah.
there can be pockets of strength.
Yeah,
What's driving the relatively strong performance of these PSU banks?
they've benefited from solid credit growth
Mm-hmm.
and have maintained healthy credit deposit ratios.
Okay.
Their operating expenses have also been stable.
I see.
And their net interest margins,
Yeah.
or NIMs for short,
In NIMS. Okay.
have remained resilient.
NIMS. Remind me what those are again.
It's basically the difference between the interest banks earn on loans and the interest they pay out on deposits.
Right.
It's a key measure of profitability for banks.
Got it. So even though interest rates might be rising,
Right.
these PSU banks are still managing to make a decent profit.
That's what the data suggests.
Mm.
And the handbook also notes that PSU banks have been doing a better job of managing non-performing assets,
Okay.
or NPAs,
NPAs.
compared to private banks.
NPAs, those are the loans that have gone bad, right?
Exactly.
Okay.
Historically, PSU banks have struggled with a higher proportion of NPAs compared to private banks,
Right.
but they've been working hard to clean up their balance sheets
Okay.
and reduce those NPAs.
So it's a bit of a turnaround story for PSU banks.
You could say that
Interesting.
they're managing their risks more effectively,
Okay.
showing stronger profitability.
Mm-hmm.
And it's a reminder that even in sectors that might not seem so appealing at first glance,
Yeah.
there could be hidden gems.
That's a great point. I'm definitely starting to see the value of taking a deep dive into these reports.
I'm glad to hear that.
It's not just about reading headlines or following the latest trends.
Right.
It's about understanding the nuances and digging deeper to find those real insights.
I completely agree. These deep dives are all about empowering you to navigate the complexities of the financial world with confidence and a deeper understanding.
Well, mission accomplished.
Excellent.
I feel much more informed about the global factors impacting commodities.
Yeah.
The specific dynamics of the Indian stock market and the potential risks and rewards for investors.
Good stuff.
What final thoughts would you leave our listener with
Yep.
as they continue exploring these markets?
I would say never stop learning.
Okay.
Keep asking questions. Keep researching and keep an open mind.
Great advice.
The financial world is constantly evolving,
Yes.
so staying informed and adaptable is key to making smart decisions.
Great advice. Thanks for joining me on this deep dive.
My pleasure.
It's been a fascinating and informative journey.
It has.
It's been a pleasure. Happy investing. That's a wrap on this episode of The Deep Dive.
See you next time.
We'll see you next time for another exciting exploration of the financial world.